Okay, so this is a payslip from a person that's an engineer working for a county council, and I've obviously blocked off a lot of personal information to reflect that. But this is a brilliant example for a standard engineer, and I'm going to go through each section. I'm going to keep it the same format as what I did with the teacher's payslip and the nurse, the Garda, occupational therapist. So very similar to those highlights what I went through. And if you know anyone that would be interested in understanding their payslip better, make sure to let them know that this information is up there. So like I say with a lot of payslips, if you actually read them, which I guarantee you 70% of people do not read their payslips, they normally are only focusing on their net pay, but it's really important to understand it. So at the top, you can see payslip details. This was done for the 22nd of April 2021, and the period is the 2021-16, so the 16th week for 2021. Next section then, under scale, you have your executive engineer scale 0.3. This is just information about your role and your annual salary. Over here then you're going to have address, that's your personal details. So down to the next box under gross earnings, very straightforward. You have your salary, and this person is paid every 2 weeks, so fortnightly. So this salary, if you divide your annual salary by 26.09, and you will get your fortnightly salary. Something I found really cool on this payslip is underneath your gross pay, you actually have another line saying gross pay for PAYE for income tax is your 1952, which is really handy, but I'll show you how they get to that figure in a sec. Moving over to our deductions, sorry that's very dark there, but the first two line items are the superannuation and ASC, which is your additional superannuation contribution. These are both pension contributions. So the first one is superannuation, and that is for a lot of public servants and local authorities. And then the second one is an additional contribution that you have to do if your income is above a certain level, mainly the higher earners. Did like a very rough calculation, and the superannuation, the 130 here, this works out at approximately 5% of the gross salary, and then the ASC is roughly 1% of the gross salary, but these rates can differ for every. Next part then is your PAYE, 324, and I'm going to show you now how that's calculated. So this is your 324 you were trying to get to. That's your PAYE tax that's owed. So from the top, you have your pay before your pension deductions, the 2077 from your pay slip. That's your gross pay. So the good thing about your pension deductions is your income tax is calculated after they're taken off your gross pay. So it's actually done on the pay slip for you. So the 2000 less your pension contributions, which is your 100 plus the 2501, so your superannuation and your ASC, that comes to 125, and yeah, so your 1900 is what we'll be calculating your income tax on. So calculating your tax then, for the first 1708.73, you're going to pay tax at 20%, and that comes to 341. And I got the 1700 figure from your pay slip. If you look at cut-off period 1708. So the balance then is going to be taxed at the higher rate of 40%. So the 1900 less your 1700, your cut-off, and then the balance is taxed at 40%. So those all added up come to 439.27 you owe in tax. Next, we want to reduce the amount of tax we have to pay, so we use tax credits to be able to do this. So this person has 114.85 to use against her tax, which brings her liability down to 324. Now this is where things get interesting. The reason I say that is because if you go back to her payslip, and by the way, I got that tax credit for the period 114.82 from her payslip here. So if you scroll down and look at her tax basis, she's on week 1 basis. So this means her tax credits have been amended for some reason. Now this person is jointly assessed with her partner, and her partner is on the pandemic unemployment payment. Because her partner is on the PUP at the moment, Revenue have reduced their tax credits as a jointly assessed couple. And the reason for this is because Revenue wanted to start collecting the tax for the PUP in real time, so nobody gets hit with liability January next year. So unfortunately, her credits are lowered. Okay, returning to our deductions, and we've gone through the PAYE. Next is the Universal Social Charge, 66, 68, and I did my own calculation based off the tax credit certificate. And after my calculation, it's slightly lower, so a difference of €19. So that is a slight overpayment on this payroll. So again, when you do your income tax return at the year end, all of this will be tied out and you might get a refund. Final item then is your employee PRSI, 8311, very straightforward. That is 4% of your gross salary. Your net pay is the figure then that you will get into your bank account. And this is your gross earnings, the 2,077, less your total deductions, 599, comes to this. I will quickly explain the two bottom sections as best I can, but I won't go into the detail. So on the left, the annual cutoff, 44,000. So this person can earn up to this amount and pay tax at 20% up to this amount. Anything over that, she's paying tax at the higher rate. The annual tax credit, 2,985, and this is a small bit lower than what I would expect. Your normal single assessed person would have 3,300 on average, so hers is slightly lower because of the PUP. The cutoff for this period, 1,700, we've already gone through this. She pays tax at 20% up to this amount. Her tax credit, we've looked at that. Her PRSI class, that's the normal A1. Her tax basis, we looked at this as well, week 1. So this is really important. If at any stage you spot on your payslip that it's either emergency, it might come up as E, or week 1, you need to figure out why. On the right hand side then, your cumulative, so this is your figures, year to date. So gross earnings, very self-explanatory, everything she's earned to date. Your pre-tax deductions, so all your pension deductions are included in the 978. For taxable pay, again, your gross earnings less your pension deductions gives you the 15. Cutoff, 13,000. This is an accumulation of all of your cutoff you would have used for the year so far. So she's allowed 44 for the year and she's used 13,000 of that. So tax then is the 2,367. That's how much PAYE income tax she has paid for the year so far. The exact same way then for the rest of the line items. So employees, PRSI, USE, there's no local property tax, and then there's the employer PRSI. So these are just cumulatives of what has been paid so far for the year.